Welcome back, everyone. Today we are going to be talking about SCHD, which is an ETF. Basically, it's a basket of a bunch of different stocks. Currently, there's about 103 different stocks in the holding. They're all between consumer defense, energy, healthcare, industrial, consumer technology. Some of the major holdings are like Coca-Cola, Verizon, Lockheed, Philips, Altria, Pepsi, Chevron, Home Depot, Amgen, Cisco Systems. So basically, this ETF was to build dividends. So if you like dividends, this is probably on. This should be on top of your list. This fund has been constantly going up. If you look at the price, its inception was in 2011. And it's gone up about 206%. You can find a lot of other ETFs that have higher growth, but you're gonna sacrifice growth for dividends. One of the reasons why I like this ETF more than any of all the other ETFs is because the dividends are qualified. So let me tell you guys what qualified is. So qualified dividends. So basically, when a stock or an ETF pays a dividend, you're going to be taxed depending on your tax bracket. Some growth stocks, some ETFs include REITs and other different stocks, and they're all treated differently by the IRS. What SCHD does is every stock in its portfolio is qualified, meaning if you hold this stock only, you're going to be taxed at a lower rate. For example, let me show you guys. So the maximum tax rate for qualified dividends will be 20%, depending on your tax bracket. I believe if you're on a lower tax bracket, you will be paying 15%. So here's right here. So if you're single and you make $47,000, you will pay zero in taxes. So you can literally have close to $1 million in SCHD and you will pay no taxes. If you're married, it's 94,000. So if you're married, you can have like $2 million in SCHD. You're gonna make about $94,000 a year, and you're gonna pay zero taxes. 15% is like if you're single, you make between these two ranges, 15%, 94%, which is a lot lower than your regular income. So let's say you have a job, right? You make $100,000 a year. You're gonna be taxed on your tax bracket. If you have $1 million, you won't pay any taxes, which is something that I would rather have $1 million and not work, not pay any taxes. And if you work, you're going to get paid. So this is how some people stay rich, because they don't pay taxes. So currently in the portfolio, this is my retirement account. I hold $6,400 in the retirement. And then the investing, I hold, where is it? Let's go through the list. I'm going to have to cut down on some of these stocks that I don't need anymore. But we'll just type it up here. SCHD. So SCHD, I currently hold 2,825, 6,000. So it's close to $10,000. I'm going to constantly add more shares. So right now my retirement account is maxed out, so I can't do any more for the rest of the year. And for my regular investing account, I'm doing $5 every day. So once I pay off some more credit cards, I'm gonna try to make it like $10 every day. And it's in both portfolios. So if I have it in my retirement account, I'm going to pay zero taxes on it either way. In my investing account, I'm probably going to pay 15% in taxes. But I'm hoping to retire on a stock like this. I don't want to pay any taxes when I retire. So if I have $1 million in SCHD, I can live off of $50,000 tax-free money. I mean, you can live off $50,000. I don't know about you guys, but I can move to another country and get paid $50,000 a year, not have to work again, not have to pay taxes. But that's one of my goals. There are other REITs out there like SCHG. This is if you're younger. This is a growth ETF. So this one, look at the max, is 656, which is 3 times more than SCHD. But you're looking at a lot lower dividend. So your dividend is like, where is the dividend on this? I'm so used to the mobile phone version. So this is like your average return, but this doesn't include any dividends. I don't think it pays dividends, does it? Yeah, 30-day yield. So you're getting paid 0.43%, which is basically nothing. The only thing I don't like is that, like, I guess you can invest in SCHG, but then when you retire, you'd have to like sell it and then buy SCHD in order to get dividends. But then if you have it in an investing account instead of a retirement account, then you would have to pay taxes on it. But if you put it all in your retirement account, which I'm now that I think about it, I might trade SCHD for SCHG in my retirement account, and then once I retire, I'll just sell it and then convert it to SCHD, not pay any taxes in the retirement account. But in the investing account, you would rather have SCHD than SCHG. So this chart right here shows you the return. So this is a $10,000 initial investment. Average price will probably be a little bit higher. Dividend, that's the current dividend right now. But then the annual growth, and then the share price growth, and how much I would invest every month, which is about $200 for 20 years. At the end of 20 years, you'll have $360,000, and that's $136,000 in dividends. So that'll get you 28,274 dividends a year. But this will probably go up because like I said, I'm maxing out my Roth IRA, so it's more like maybe $300 a month. And as I get older, I'm probably gonna add more, so that's $479,000. But what I'm doing is I'm doing different strategies. So like, for example, I'm also investing in VOO. So in my retirement, not in my retirement, in my investing account, I'm doing VOO. I'm doing $5 every day, so I have about $2,500 in VOO. So all it takes is, all you have to do is get started, and it becomes kind of like addicting. So you just put money every day. I mean, not every day, but you can. If you have enough disposable income, you can just deposit $5, $10 every day, and then you'll see the growth. And at the end of the year, you can tell how much money you can make. So like, year to date, right now I'm down, but my overall is 32% profit. But that's because of all the tariffs right now. I was pretty close to like $260,000, I think, at one point. So $250,000. So once the market recovers, I'm expecting to be around 300,000, which will probably be maybe at the beginning of next year. We don't know exactly what the market's going to do with tariffs and anything else that's uncertain in the future, but just to let you know, it does always recover. So right now is a really good time to buy in. The expense ratio is really low too. It's 0.06%. So it's basically nothing compared to other funds that pay like that you have to pay like 1%. So if you invest $100,000, this is how much they'll take for managing your funds. I've seen some that are like 1.25. I mean, if you have $1 million, that's a lot of money. So you don't want to buy an ETF with a high expense ratio. So this ETF is very popular, but like I said, other people like VOO, QQQ, attracts the top tech companies. So you're looking at like Apple, Microsoft, Nvidia, Amazon. So this stock probably gets you a lot more returns, but it's very volatile. Like during COVID, it could dip pretty low. So 500% in 10 years, but 20 years. Right now it's really low. I'm doing like $5 every day. Actually $10 every day. $5 in margin and $5 coming out of my account. And then there's also VTI, which tracks like international total market. So this one's 352. So all of these pay really low dividends, but they're meant to be growth ETFs. So this tracks all of the international stocks, so like Apple, Microsoft. So it's similar to QQQ, except you have like real estate included in here. SCHD does not include real estate, because if they do include REITs, then they would have to pay. It wouldn't be qualified, because in order for it to be qualified, they have to meet certain criteria, which real estate REITs do not qualify. So that's why, like, if you have a REIT, you want to put it in a retirement account. So like, where is it? Oh, I have I think this is like an 8% dividend monthly, which is what I like to have. But if you had an investing account, you'd probably be paying like 20% in taxes. But if it's in a REIT, you're paying 0% in all the dividend. This stock has been growing, but it's been flat for the last maybe 3 or 4 years. So it's pretty flat. But I'm just looking for that income when I retire. They're still doing pretty well. That's 500%, and they've been flat for like 6 years. I think they've just been buying so much real estate that they see a lot of opportunity, especially like during COVID and all, and they're just buying more and more real estate. So eventually, I think they'll just stop buying real estate and focus on growing its dividend. I know they diluted during like COVID and stuff, but they didn't want to get a loan. But back to SCHD, if you like quarterly dividends and don't want to pay much and taxes and eventually hopefully retire, that's what I'm doing. This is not financial advice, so please let me know what you guys think about this company. Do you guys like growth ETFs? Do you like REITs? Just make sure that you do not copy my portfolio. This is something I do for fun. So I'm hopefully right now it's $10,000. I'm gonna try to get it to $15,000 by the end of the year. So make sure you like the video, subscribe to it if you want to follow my journey. So thank you guys.